Righto, Money Miners. Welcome to the world of Matty and JD. We're getting intimate today, JD. Just me and you, Cobber. GC's got the cold sweats. We're sat buddy and Trav's in Kalgoorlie. So, mate, we're flying the flag.
Mate, I'm pumped. We've got M&A to talk about.
We do.
Big deals.
You know, something that occurred to me this morning, I'm a bit slow on the uptake sometimes. I'm like, that's why they call it Axis Mining Technology, because of the orientation and that just clicked to me. Did that click to you? Why that name is that way? Axis.
Oh, sometimes it takes 5 minutes, mate. Sometimes it takes 3 months, but we get there in the end.
It took me a few months, and I'm like, of course, quite clever they come up with that name. So yeah,
they did.
Apologies to Axis that you've got a bloody dumbass like me doing an ad for you, but hey, the penny's dropped. And it should have dropped for everyone as the trusted advisor for drill hole survey instrumentation. Axis.
Go Axis.
Yeah, righto, JD. Big deal. Osisko and Goldfields. Now, there is, and we've learnt today, as you explained to me, there's 100 million bloody Osiskos out there. It's not Osisko gold royalties. It's not the one that had the royalty of bloody Castlebell. It's the Osisko mining. So
a group of companies, as I think they call it, mate. So
yeah.
kind of a bit of a Lundin type situation in a way. Maybe not the same allure as the Lundins, but this is the Osisko mining we're talking about and Goldfields. So two non-Aussie companies, although Goldfields have a fair few operations out here, but we'll kind of weave our way through it, mate, given that it's not our home ground we're playing on.
The Abitibi Belt. There's some bloody gold in that joint, it appears. So, right, what else we got? Mate, there's a bit of bloody word on the decline going around in the papers about potentially Albemarle doing something with their Greenbushes stake. Don't know if there's what substance behind that yet. We've had a big block trade on a gold, one of the goldies. And what else you got, JD? That's
mate, we're going to do the regular Africa segment, and we're going to just touch in on what's going on in Zambia and the Congo and see if there's any sort of repercussions on the copper market.
Oh, mate, God's country. We've
got to start with the deal, though, mate.
Yeah, mate, let's get into it. So Osisko and Goldfields, who were in a JV for the Windfall Gold Project in Quebec, and this Goldfields only just bought into this JV. I think it was start of 2023, and
May.
And they have now buying Osisko to take 100. That was for at the project level. They're just bloody taking Osisko now. They're going to have the whole bloody thing. JD, talk me through this bloody big deal. She's huge.
Mate, let's run through the deal and then a bit about the companies and everything. We need to get people up to speed, not least us. So
we'll get everyone comfortable, JD. We want everyone comfortable. Just sit back and relax.
All right, we'll paint a picture, mate. So the deal is being done at $4.90 a share Canadian in cash. So fully diluted, that's just under 2.2 Canadian billion dollars for the company and an EV of about 1.5. Now there's a bit of kind of funny math going on in there because, like you say, there was a JV that was done in early 2023. And part of that was a $300 million deferred cash payment from Goldfields to Osisko to buy into the stake. Now that's been cancelled as part of the deal. There was also a commitment for $75 million in exploration that Goldfields were obliged to pay, also been eliminated, obviously, as they'll own the whole thing. They can make their own decision. So there's a few liabilities on the Goldfields side that are being removed as a part of this transaction. And it was interesting to kind of hear a couple of the comments from the company Goldfields in relation to why they're using cash. Because when you think back about it, we don't see too many of these deals just being done purely out of cash. It's often, a bit of scrip, bit of cash, or maybe all scrip. But it's kind of, it reflects the relative size of these and also the speed at which they want to get the deal done. So we saw Goldfields say that they see a decent amount of intrinsic value in their own stock, and they saw that it wasn't the optimal strategy to dilute their shareholders anymore. Hence, they're just going to use their cash. They took on another $500 million in debt, signed up a new facility. They had a bit over $400 million in cash, and they had already a $1.3 billion facility that was untapped as well. Now, Matty, the terms are pretty standard. You'll remember Karora we spoke about, 2/3 of shareholders on the TSX company there being Karora here at Osisko needing to vote in favor of the deal. And you need a simple majority on the day of voters to vote in favor of the deal. And I mean, given the backing, given the huge premium, the board backing and all these sorts of things, I don't imagine those points will be a huge point of contention.
No, you wouldn't think. You'd think a 55% premium should do the job, Cash. You'd say, Jodie.
Mate.
She's pretty, this is how it is. If you don't like it, yeah.
It's pretty wild. It's been a while since I've seen something like that for a company of this kind of size, you know. So interestingly, on the aspects of deal protection, she's looking pretty tight. $108 million break fee payable for anyone that wants to walk, obviously, given certain circumstances. But that's at the higher end of deals that I've seen. If you're looking at a deal of a bit over $2 billion, that's over 5%. Now, remember, there was a bit of...
I think that Yamana deal when Goldfields got the break fee for that, I think that was like a $7-odd billion deal, but I think the break fee was like 200-odd million they got from that. From memory.
and if you remember the Westgold Karora deal with Ramelius trying to get themselves in, one of their complaints was at the abnormally large break fee as well. And from memory, that was 4%.
40
yeah,
million?
4%. 40 exactly. And here we're talking 5.3% on the fully diluted value. So it's definitely at the higher end and gives a good bit of deal protection. And Osisko, you know, they've jumped 63% today. That's huge. And Goldfields have come off 6%. Kind of natural you see the acquirer come off a bit, but Goldfields might be the only gold stock I could find today that has come off. It's been an awesome day for the goldies. A few good earnings out there, and then this one just lighting a bit of a fire under the, you know, developing or undeveloped assets in North America and a bit in the ASX as well, which we'll get into down the track, mate.
Right. Well, JD, give us the wrap on Goldfields before we get into this Windfall project, which is she's a pretty bloody impressive operation, it appears. So you'd say it's like a bit of a Canadian Bellevue, like you're looking at the style and the grades and everything. A lot of Bellevue parallels, mate. I think you're spot on. Now, Goldfields, you'd be fairly familiar with some of the operations. They've obviously got a fair few mines. St. Ives being probably the standout here in Australia. They've got a number of operations, and then they're also so they got Agnew. St. Ives, which has Invincible, which they've had the big, you know, sugar hit from because it's friggin' impressive. Then, you know, Agnew is probably the historic one, which it was just Wahroonga, and then the other side, which used to be Lawlers, was Barrick, but now that is under Goldfields ownership as New Holland, they call that. So that's all joined up. Then they got Granny Smith and obviously the JV with Gold Road at Gruyere.
Yeah. So looking at the most recent numbers, about half the production came from Australia, a third out of Ghana, and then the rest out of South Africa and Peru. Now, they're all in sustaining cost the last quarter, jumped up pretty massively to a bit over $1,700 US. But if you look back just a year, it was around that 1,100 number. So they call themselves a 2.3 million ounce per annum producer, and they like to use a number in the low 1,000s for all-in sustaining cost, which is pretty, you know, unlike what the recent quarter has been like. And that sort of plays into a rationale behind the deal, which we'll get into as well down the track, mate.
And we'll get into like how far it's developed ahead. When they start producing, you would anticipate that all-in sustaining cost to be pretty low, because when development is that far ahead, you don't have to do it as quickly. So their OPEX should be pretty good. Hopefully,
it's good for the marketing material as well, right? When you can advertise that all-in sustaining cost after all
you've still spent the money. Like, it's been spent. It's like
don't worry about that.
Don't worry about that. Don't look over here. You look over here.
Exactly. So I mean, let's get into Osisko now. They're perhaps a bit more exciting than Goldfields themselves. So obviously, like you say, already JV partners on the Windfall project. This deal was signed about a year and a half ago. That came with $300 million up front, And then there was, I think $34 million was the number to sort of even out what Osisko had already paid in CapEx to make it sort of true 50-50. And then you had the deferred payment as well as the commitment to spend on exploration. And it was a kind of funky, very even operating partnership that they'd signed. It wasn't like Gruyere where you've got the one out and out operator. It was a partnership group that was made up 50% on each kind of side. So it's a bit different. And I think that's one of the bonuses of getting this deal done, just streamlines decision making because you don't have to go and agree everything with the other side of the JV partnership. You can just go ahead and do what you think's best for the asset. But to kind of expand on Osisko more broadly as a company, I saw an interesting tweet from David Finch, who we've had on the potty in the past, and he put up a cheeky screen grab from Bloomberg that shows the number of equity offerings, so placements that Osisko has done since 2015. And you can see a few of these are doubled up. It's not 25 isn't the perfect number, but they have done a fair few capital raising. So I'm sure there'll be a few upset brokers out there. And if you look at the share price performance, it's been in a kind of similar range, sort of floating in between, what is it, $2 and $5 for the best part of a decade. So,
yeah, wow.
Since they've discovered the project and, sunk 2 million meters of drilling into the thing, they've just been trading in and around that range. And, we haven't actually even had FID on the project yet, which we'll get into in a sec when we get right into the details of what the project is all about. But to round out the financial side of things, there's about 5 million shares sold short, which was, over $10 million before the day, which is, a lot more. So someone or multiple people out there are having a bad day, aren't they, Matty?
What about, you mentioned the oppies and the warrants and everything on the change in control. How's that working? What's she all bloody vesting or what's happening?
Yeah, so 28 million all up. That sort of speaks for both options and warrants that were outstanding. Every one of them is in the money now, so that's all going to go through as part of the deal. Now, I mean, let's get into the project itself, Matty, and I'll flip over to you to get into the real details. But the broader picture is 4.1 million ounces, right, at 11.4 grams. That's a belter, and that's just the measured and indicated resource.
You got,
Yeah, included in that is the mineable reserve of 3.2 million ounces. And
I think that grade's at about 8. I think the reserve grade's a bit over 8. Or bang on 8,
spot on.
I think. Yeah.
And it's interesting to kind of look at some of the brokers and what they've drummed up in their reports. They're talking about a mineable reserve of, some of them are at 5 million ounces. So they've clearly factored in a lot more conversion down the track, and that plays into the NPV of the project and whatnot. But like you said before the show, before we started recording, this isn't actually permitted yet. So permitting is advanced. They've put the final environmental studies in, expecting them to come through in the first half of next calendar year. But, that's kind of like what you spoke about yesterday. It's a big difference between projects out there and what you're paying for, right?
Yeah, and like the couple of million meters of diamond of drilling plus 14 kilometers of development already, developed down to 670 odd meters below the surface. So it's they must be pretty confident on that permit coming through, I'd reckon, JD.
Mate, if you've sunk $1.1 billion into the thing, I think you'd be pretty confident that it's going to come through. To rattle off the financial metrics of the project, 1.2 billion NPV, that's using a 5% discount rate, but also a $1,600 US gold price. So, can kind of work on those things in either direction, 34% IRR. And then you got around about 300,000 ounces over 10 years at a 760 US all-in sustaining cost. Like you say, 8.1 grams per ton, and around about an $800 million capex that still needs to be spent. So they want to hit the ground running at, end of 26, early 27, depending on permitting, and get this thing into production.
Yes, right. So there's let's go. Let's get into the mine. Should we get into the mine and JD?
Mate, please take the microphone off.
Well, no, before we do, the big ticks for these ones that really give them a leg up in mining cost? Fully hydro powered. That's
Jeez, it's good while you can get it, hey?
Yeah, so we don't, unfortunately, don't have much of it in Australia, except for bloody snowy hydro. There's no bloody mines there. They're mines in themselves, those bloody tunnels. But like cheap as bugger, isn't it?
Yeah, and they've got it all permitted and hooked up with Quebec Hydro, so they're all good on that front. But
there wouldn't be the hydropower is literally the only reason you would not need Silverstone, because that's the only power they don't do. So that's probably
telling me they do
they
everything
do
else
every
under
other
the
bit
sun?
of power. I've actually probably tipping that since they've been such the meteoric rise of Silverstone in the power industry might actually see them diversify into hydropower just to keep themselves interested. I'm thinking out of Australia, who's going to step up to the plate for hydropower when we do, if ever, need it?
Mate, the government should get Silverstone. The government should get Silverstone to sort out snowy hydro for them. That's been a basket case.
Oh, mate, they would have done it heaps cheaper. More efficiently.
Way cheaper.
Heaps cheaper. So, mate, well, they've got the next best thing for the environment. They've got renewables. They've got hybrid. They've got old school power if you need it. So, but anyway, they might, as you said, snowy hydro. That might be a good job for old Kenny and the boys.
Should be a big job.
Not bad. Anyway, so where is this? What's this hydro bloody supply? And let's get into it. 1.2 million tonne per annum mill by the looks. Bloody high grade. Peak, so it's looking about a 300,000 ounce per annum operation. I think it says peak production of 374,000 ounces in year 2, but we all know that we know about production forecasts versus actuals when we get there. So, but as I said, freaking can't ask for a better rolling start like the capital development, like into the ore by the looks, is down to 671 metres below the surface. So, and looking at this picture of a long hole rig, unless it's drilling it said long hole drilling. So I don't know if they're drilling production holes already, if they were just drilling a bloody vent rise or something. But they're
I can see they got 4 vent rises already sorted.
Yeah, so I don't know if that was an intermediate or a bloody escape. Who knows? But it is developed that freaking far ahead. But as we said, haven't announced FID yet. That'd be obviously hinging on, permits and stuff as well. But that's just, once that mill gets built, should be bloody rocks flying out the friggin' portal if the development's that far ahead. So, and you look at the long section here, like these Abitibi belt ore bodies, like they just will likely just keep going to the bloody centre of the earth as long as you can keep the seismicity under control. So, and all the drilling, like massively, massively de-risked. And I read through the study briefly. I'm not as in the weeds in this one. It's like, because they don't notify me these deals are coming, so I've got to try and read it today. It's so rude of them.
Very rude, mate. But
as we said, a lot of parallels to a Bellevue style ore body, like very narrow vein, high grade.
But the key difference, right, Matty, as you're kind of pointing out there, is that these guys have done the development beforehand. Now the start of production has been pushed back, I think, almost 2 years already. So there's been delays that are taken in part relating to permitting and all these sorts of things. But they clearly didn't run the risk of getting to the point where the mill is really hungry and they can't quite feed it, because it looks like they've just taken things a whole lot slower than Bellevue did, right?
Yeah, but Bellevue were developing for a while before the actual mining proposal was accepted from memory, like on the back of the native title and everything, because they were developing for ages before the mill got started built. But it just, this one's obviously a lot deeper in terms of how much they've put into it. As you said, it's been ticking along for bloody years. One thing, we'll go a bit of underground, we'll get in the weeds of underground with these ore bodies, JD, when they are developed that far ahead. Because what they'll do, they will start multiple mining fronts, because if everything's developed, you start a stoping front up the top, bloody skip a level, start another one down there, skip a level, start another one. So they're not just dictated by going top down from the top and waiting on everything to be finished. They can bloody get a lot happening at once. But what will happen is, and where they have to sort of adequately plan it, and I've seen this go wrong a lot, is when you go in to mine the skipped level, they call it like the sill pillar. So like between the two stoping fronts, there'll be a solid chunk that hasn't been taken out yet. That's where the stress starts to really concentrate, because all the ground stress, because you got a hole here above and below, it all just concentrates and bloody tries to squeeze it like a pimple. And what happens is if they do develop the jumbo drive for that sill pillar, then they go back in there later on. It might sit there for years, but all the stress starts concentrating and it just squeezes it, and the seismicity's going off its friggin' head. So you end up bloody bolting it and put all the ground support in. But then you got to go back and, because the ground's all that fucked, you got to scale it, snap bolts off, resupport the whole thing. So I'm hoping that they adequately plan where those sill pillars are. Don't develop the jumbo drive, so you don't have to bloody put all the support up to us, because bloody rehab and all that sort of shit gets a bit hairy with rocks and shit flying everywhere and snap bolts flying when you're snapping it off. So it's just hard work. I'm hoping sometimes they get white line fever and they're like, oh, we'll get in there, we'll do the ore drive because we get the development ore because we're here. But then you just get bitten in the ass later on trying to rehab the whole thing to re-access it. So that's where and I think the report said once they get down to about 600 meters, which is where they are now, that's when the stress in the sill pillars will start becoming an issue. So I've heard there's some like LaRonde, some of the other neighbouring mines in the Abitibi belt. I've heard because they're so deep, the seismicity is pretty considerable there with the stiff ground. So a bit of bloody banging and cracking. So anyway, we'll see how they go. The one thing it's good for, doing the re-support thing, it's obviously sensational for DSI if they rehab the whole thing, because they put the ground support in, snap it all off, put it up, pay 2 bloody invoices. But I think even Derek Hurd and the DSI team, JD, they know it's not the right thing to do. They'd be like, hey, don't develop it yet, just be smart. Not many mining services companies think that way out of principle. Like, it's highly commendable to the DSI team, mate, because there's the right way, there's the wrong way, but then there's DSI's way.
It's like the money of mine way, mate. Just do the right thing, hey?
Mate, in the words of the great Russell Peters,
be a man, do the right thing.
Very good.
Stuff,
but yeah,
Matty.
she's a pretty impressive ore body by the look. So, and I know you're going to probably I should have read what you wrote, but this could pose very interesting for North American gold flavour, especially for Australian ASX-listed companies that have North American gold projects, that a lot of them picked up in the mania in what was that, about 2020, around then?
Yeah.
A lot of them
probably starting 2019, 2020, 21. There was a few. I mean, from Osisko's perspective, you look at the deal and it seems like a kind of inevitable outcome in a way. Obviously, it's not a company we've followed in great detail, but you kind of see how long the process kind of took, and the development risk that we've spoken about a number of times. If you're a single asset company, just how great it is and how much better that can kind of be handled within a bigger organization. It does seem somewhat natural, and like we've said a couple of times now, there are sort of similars to Bellevue, and the consensus in the market that Bellevue would kind of be taken out, but the share price kind of got away from them, and everyone kind of pointing the finger saying Northern Star would be the ones who'd scoop them up. And if you look at the deal from Goldfield's perspective, like we said, speeds up decision making. I think that's sort of first and foremost. It just makes sense on that part. I think there's some pretty serious long-term exploration upside, and it's probably worth us doing a deeper dive on the whole region. But a lot of the metrics, they look quite different if you're looking at just the ounces included in the mine plan here, or the in the resource surrounding the mine versus if you look at the broader package that Goldfields are now picking up, there seems to be some pretty serious exploration upside. And I mean, Osisko have got this earn-in with Bonterra. They've now done 35 kilometers of drilling there. So there's quite a few sort of tenements that are being picked up by Goldfields. And I think, you can say with a bit of confidence that this operation is going to go on a whole lot longer than the 10-year mine life that we've got from the most recent study.
Yeah.
I think you can't undermine the diversity to the portfolio as well. Like I said, there's a fair bit in Australia, which is obviously top-notch jurisdiction, but you got a bit in Ghana, you've got a bit in Peru and a bit in South Africa. So going out to Canada isn't the worst place in the world to go and develop this thing. I'm assuming that permits and everything are going to come through without a hitch.
Yeah.
And to look more broadly on the North American goldies, like you've said, Matty, and on the Aussie goldies as well, I think there's a fair bit to get excited about. And I think the market has really cottoned on to that today. I mean, I was just flicking through a number of the names in North America, and you can see Probe Gold up 7%, Snowline up 13%, Skeena up 23%, IM Gold up 10%. They had good results out as well. A few of these companies had results, but B2 up 5%, Nova up 6%, Barrick up 9%. They also had earnings that came out, but across the board, all these names are up and up pretty strongly. You look at the undeveloped Aussie goldies out there, and there's only a handful of kind of decent size, but De Grey was up 6%, so 6% isn't a normal sort of move for them. Spartan, they're back around 130, just to name a couple out there. And if you want to look at the metrics that the deal's being done at, I read a broker report and they're talking about this deal being done at about 0.8 times NAV if you're flushing through spot prices, whereas the rest of the developers in Canada, the peer sort of group for Osisko, they're trading about 0.33 times.
Yeah,
so
right.
that is a long way off. And we've spoken with numerous fundies over the past year about just how cheap North America is. And it's been a painful bloody trade for a heap of them, right? Because things have just gotten worse and worse and worse rather than, playing out as a lot of those fundies would have hoped. That's both in the critical mineral sort of space as well as the gold space. And potentially there's some sort of green shoots coming through now with corporates saying, this is it. Like prices are cheap enough. We're enticed to do a deal. Obviously this one's slightly different situation. They already had 50% of the project. But I think that's what's coming through the market and people are getting a bit excited about it.
Yeah, no, the ones to think about, like because there's a North American gold assets within ASX companies that are essentially fucking valued at nothing on their in the value they've given. Like Firefly it's a copper miner now, but don't forget they've still got the Pickle Crow thing, which was Orteco, which was 3 million inferred ounces, but like that's essentially not really being valued in a way. It's like the focus has gone to copper, but they've still got that and that was when they went from like 2 cents to 20 cents before the share consolidation, and then rode it all the way back down. Like you got Sugar Zone with Silver Lake, like that, like not really, with Red 5, sorry, like that's not really, I don't know what the brokers put for value of that, but it's not like and like the Labyrinth Gold project, that might they couldn't even sell that for 5 million, like, which is what they bought it for.
It probably comes across a bit harsh, but I think you're spot on, mate. I think it's true, and it's
so that all that stuff might actually start coming back. Who knows? But whether this is like they're all undeveloped and everything, like years and years away. Like look at this one's bloody developed and still waiting on a permit. So it's to be very interesting.
It's all flushed down from the poor performance of the operators, though. Hey.
Yeah. Yes. Who knows?
Unfortunately, that's where it's kind of stemmed from. But I mean, maybe that can kind of turn around. And if you look at even more broadly, this isn't an Aussie specific thing, but just how cheap resource companies have been in North America and Canada specifically. There was another group, Crew Energy. They got a bid today, 76% up on the news. So they're a $1 billion company. It wasn't a negligible deal, And I think that just goes to show when you see those sorts of movements on M&A deals, there's a few people looking around and thinking, hey, maybe now's the time, and these things are really, really cheap. And, maybe the Canadians get a bit concerned. We already saw them put all those protections around the critical minerals companies. There was, certain thresholds that needed to be met. Obviously, this one's not applicable because it's gold, not a critical mineral. But the exchange will just get smaller and smaller. Here's another couple companies that'll fall off the exchange because they're just so cheap and there's not the liquidity or the interest in the companies in Canada.
Yes. Oh, bloody mate. Fucking one deal happens, we're like, this could be shit going everywhere, but it might not be. Anyway.
Well, I mean, you say one deal, mate, and I was thinking the same going into this. And
it's about the size of 20 deals, but
this is true. But when you put it into context of the broader, mining M&A kind of cycle we might be in, there's been a fair few. And I was listening to Mark Bristow earlier today on Barrick's earnings, and they had a good quarterly. They checked a lot of boxes, bought back 3 million shares. The average realized price was up 20% on the quarter. The divvies kept going and all these sorts of things. But, specifically he was asked about M&A, and he called it a pretty hot M&A market, excuse me, out there. And, he was really eager to talk down the potential. And of course he's going to do that anyway. But he's saying it's very hot out there, particularly in the copper space. There's a lot of questions about that. He's saying, we like Canada. He was asked specifically about this deal that was done. And he said, Canada is a great jurisdiction. Love to have more assets in country there. But this is a quite heated market, and we're not going to, do anything kind of pro-cyclically, if you like. We don't want to destroy any shareholder value. We've got deals that were done 5 odd years ago that we're continuing to bed down and see the value come through on. But who knows? It's one to watch. There was some specific interesting questions actually about First Quantum and the operation in Panama, and they did say they were keen on potentially partnering if the Panamanian government came around and gave First Quantum what they think they're due and gave the right to mine back. That was one he was comfortable speaking on, but by and large he was batting off a lot of the questions.
Yeah, it's when small gold and everything's been bloody punished so much after the last few years, and with gold at frickin' all-time highs, it's just interesting. There's not more of it happening, but maybe there's just going to be little bits here and there.
There's really premium assets though. They're the ones that stand out, and sooner or later they get bought, right?
Yeah. Well, this one's a absolute rip snorter. It appears on the surface, but as I said, don't know, not in the weeds with it, but yeah, she looks pretty good. That's about it, JD. That's our gold fix,
mate. We can segue into another premium asset, Greenbushes.
Yeah. So have we got any substance on this, or is just the data room article?
Substance. We've got a data room article.
Right.
What do you need, mate?
She's all happening, but they're reporting that possibly Albemarle's 49% stake in Greenbushes might be up for grabs. As we know, TLEA owns the other 51%, which is half Tianqi, half IGO, a bit in Tianqi's favour. But yeah, that's, I suppose Albemarle, they're.
Do you think there's any substance to it, mate?
They got the brine. They'll have the brine and converter stuff in America.
Yeah, they've got plenty. They've
still got plenty.
From South America to North America to Asia, they've got processing and assets around the world. But I mean, do you seriously think there's any merit to the rumors that Albemarle would sell a stake in, quote unquote, the best mine in the world, best lithium mine in the world?
I find it so
hard
to believe you
almost the bottom of the market.
Yeah, so they were going to bid $3 for Linetown at the top of the market. Now they want to sell Greenbushes at the bottom of the market.
I can't believe it.
That's what the fuck are you doing if that's the case?
We have heard people slam Albemarle and their decision making in the past. That wasn't from our mouths. That was a number of people didn't speak highly, but they're an American company. We're not quite as close with them, but that would be outrageous pro-cyclical kind of behavior and
super pro-cyclical.
I don't think there's any kind of merit to it, and I'd be seriously blown away. I mean, if they were, I think every major miner under the sun would be pulling a ticket to try and lob a bid.
Yeah, especially because it's making money now. Like, it's making money even at the shittest prices. I'll just
I mean, big capex bill this time round, but even with that big capex bill, there's a long mine life. We spoke about challenges and stuff, but I can't put too much weight to it.
Yeah, but then how would it work? Like, so if they're wanting to un-Australia themselves after being very Australian, like the Kemerton thing would have to come up for go. Like Greenbushes would be pretty easy to bloody sell, but I don't know how easy the Kemerton plant would be to sell for them. That'd be and you'd assume both of them would have to go.
You would. Everything's got a price, right? I mean, if you can give it away, but after they've sunk, north of US 1.5 billion, as it was sort of put to us, I don't know, but I'm kind of reminded of Manny Dat and how he spoke about picking good companies and whatnot in the resource space and picking assets, projects, whether that be downstream or mining assets as well, with sunk capital in them is just a good way to get ahead. And you have to have a long time horizon. And that, hypothetically, if Albemarle were to go ahead and try and sell these things, then you sure would be taking advantage of a whole lot of sunk capital, and maybe you could turn it around.
What do you think would happen if they sold it, like TLEA could buy it off them? I don't think IGO could buy it by themselves, could they? But TLEA should be able to, the joint venture would, so then it could be possibly 100% TLEA. But then if TLEA bought the Kemerton one as well, does it potentially make Kwinana a bit redundant? Or, I don't know, the capacity of Kemerton?
I think there's
you wouldn't
a lot
run
of
two converters, would you?
I mean, I think there's a lot of question marks at the moment. The question on whether you'd run the converters kind of relates to the capacity, and if you've got the spot and you can make money, then why not run them? I don't know if I don't know if there's any rules on who could bid. There's a few question marks on those parts. If TLEA were to bid, though, that would leave IGO still in a similar position with a kind of non-controlling, non-majority interest, because you just have, marginally over 50% belonging to Tianqi and slightly less to IGO. So they'd be in a bit of a similar situation to what they're now in and what they're criticised pretty heavily for. So
that'd be huge. That'd be a fucking huge deal. Like just
they
for
spent,
the,
what did
just
they
for the
spend?
group.
$2 billion for their 25% back in 2020, I think.
Yeah.
21.
But if if Albemarle wanted to sell it now, geez, now's the time to pick it up. Like that could be like, who knows what the future of lithium is, but far out. If IGO ended up with 49% of Greenbushes, that'd be pretty fucking phenomenal.
Mate, if they're putting it up for sale, maybe we can dust off the old money of mine checkbook and see if we can do anything.
Bit of script. Get a bit of script. I'll run it through the desk. Yeah, speaking
you get a few bidders. Exactly. Speaking of
who
what you've been doing on the desk.
Who do you think? Imagine if MinRes put a bid in.
MinRes, they're in a bit of trouble across their assets, right?
Yeah, with the
I mean, I'm sure Chris could get the backing. He could do the raise, and I mean, at the moment, there's not the capacity to do a whole lot of debt. There'd be a serious amount of paper that'd be needed issued, but if anyone could raise the backing, he would be the person.
But I don't think a non-controlling interest in something is probably in their wheelhouse.
Yeah, and if Kemerton's any part of it, then there's no interest. They're already sold out of that bit.
Bloody out of it.
Yeah.
Or unless Albemarle might just stick to chemicals instead of the mining. I don't know. Who else?
An expensive lesson.
Gina. Gina.
And if we're rattling off names,
got the Liontown stake. So imagine that'd throw a spanner in the works. I reckon she wouldn't give a fuck how big it was.
There'd be no shortage.
Oh well, let's hope something happens. It's just write anything in the newspapers. Just get us talking. I love it.
We're good to go.
We're good to go. Yeah. Speaking of the desk, mate, I'll need my own desk because I can't get a freaking answer from anyone about this. But I would if.
What did you see though, mate? What did you see?
If it was my desk, I would have. 40 million shares of Genesis Minerals crossed this morning at $2.14. So Genesis up 7% today. So about the best of the goldies other than De Grey. De Grey's up 7.5%, as you said. Pantoro's up over 10%. So, yeah, no, I heard it's possibly RCF that have sold the stake, which is they're probably, only one that would have that much aside from Aussie Super.
Yep. So they were good backers of Rao coming in and all that.
Yeah. So
back a little while now.
Look, there's a good chance of that. Genesis is 8.4% shorted, so it could well just be a short closeout. And I think it's represents about 3.6% of the company. So it mightn't even pop up on the register, but it didn't look like it was because it was in market. So I don't know how much I've heard. It wasn't really shopped around or anything. So it might, whether it was just a short closeout or something. So it'd be interesting to see old short man in 4 days' time to see if the short interest in Genesis drops considerably or not. Because that's
that'll be a bit of a tell.
So I don't know. I doubt it's bloody. Imagine if it was Red 5. That'd be hilarious. That'd be good.
Well, we'd have stuff to yap about for days.
Yeah. So unless they held a little bit before, I don't think we'll see a substantial. But yeah, it's very, very interesting. Maybe because we saw Regal go over 5% in red the other week, and that's 5% in the Regal name, so probably more in custodian as well. Like, whereas, so it'd be interesting to see what's going on here. Don't know. Can't get.
It will be, mate.
Can't get answers off the desk.
We get a bit of colour soon, I'm sure.
That's what maybe if I was doing work experience on the desk, I could have flicked you a message. Not allowed to do that, I don't know the rules of the desk yet, but I will. JD, Africa, your home. You're pretty much your unofficial home of copper mining. Zambia. What is happening over here?
My adopted home. So there's been a bit of a tit for tat between Zambia and Congo, and why it's kind of important is because heaps of copper comes out of this part of the world. So specifically the Congolese side, that's what's been sort of hampered here. They've been going back and forth. There was a bit of a ban from the DRC allowing beverage imports into Congo, and Zambia's kind of retaliated to that and said, we're blocking the borders. And mate, when I was in Africa last year, I remember pretty clearly at a number of the borders between the countries, it wasn't specifically this one, but there was already kilometers long of trucks built up, coming in from Botswana into South Africa and a number of other border crossings. For kilometers, you could see trucks backed up with just sheets of copper on the back. And that was par for the course there. Sort of spoke with a few people, and from these mines in the DRC, there's a few sort of routes you can go out. You can go down to the, Port Elizabeth, some ports in South Africa. You can go east, west. They're trying to build out this Lobito corridor that would kind of avoid this. It'd be the train line that the US is backing through Angola. But at the moment, it's all going through Zambia, and stopping this stops copper getting out. And, let's just see if there's any kind of repercussions. Obviously, these things tend to get worked out, and it is just a bit of a political kind of shove. But there's been a few of these things in the past. There was one with cobalt not too long ago, with the DRC accusing CMOC of not paying their taxes. And that lasted, I think, 10 or 11 months. And they couldn't ship any of the cobalt out of the country. So who knows what this leads to? I'm sure it won't be too much given the importance, but I think it's one just to keep an eye on. We've seen these sort of disruptions in the past and what they lead to. So I think it's definitely something just worth observing.
Mate, JD, you getting a vibe at the moment there's a bit happening? Like there's a lot of up in the air stuff, like between last week with the whole yen carry trade and the bloody, mate, you got Zambia and Congo, we've got a bit of gold M&A, we've got friggin' block trades happening. Like I can feel mining heating up.
Mate, I'm completely with you.
I've got a good
broader
feeling.
markets are completely fascinating. And, like we kind of touched on last week, commodities have been getting whacked around a fair bit on all this kind of talk of recession and all that kind of jazz, copper and everything else getting hit under the sun. But for corporates and sort of longer term minded people, I think there's a couple opportunities sort of spitting themselves up, and M&A is the thing that everyone's eyes are drawn to, that's attention grabbing, but depressed prices for like longer periods is where the opportunities kind of lie, I reckon.
You question without notice, because you see how I said yen carry trade so confidently. What the fuck is it? What does that mean? Mate, what am I saying?
I included a wicked article in the director's special on this, but essentially what you're playing at and what a lot of these traders play at is the difference in interest rates. And in simple terms, you're kind of taking money in one jurisdiction and trying to earn a better risk-free rate from the government that they pay out in a different country. And it was a trade focused on the differential between the US interest rates and the Japanese interest rates. And it all kind of unwound fairly quickly when the Japanese central bank lifted their rates. They've had famously low rates for bloody ever, and they lifted their rates from 0 to 0.25% and kind of startled a few people, and the trade kind of unwound. A lot of people sell out the currency on one end, buy it on the other to try and close it out.
So they were borrowing Japanese yen and putting it into US dollars on a like some US dollar friggin' term deposit or facility at a higher interest rate. So they're borrowing at a lower interest rate, earning higher there.
That's right.
Yeah, right.
Trying to earn the difference minus the transaction and other costs.
Oh, there you go. Sounds like a bloody like a CDO sort of thing. Like just like in terms of like getting a shitload of something, earning a little bit off it.
I think the way to kind of think about it is, you're right in a sense. You're picking up the premium. Yeah. Every day you're kind of getting a little bit of cash, a little bit.
And so why did
you run the risk of it unwinding massively?
Okay, so when they lifted the Japanese interest rates, was it last week? Or
maybe the end of the week before.
Yeah, so when they did that, then people started flooding that money back into the yen. So
yeah, I mean, you've also got the risk on the other end where a lot of pressure of rates in the US coming down. Yeah. A lot of people talking about when's the Fed cutting, and markets price these things in their own time. They're not, the shorter term of the interest rates are priced off what happens by the Fed, but everything beyond there is priced by the market.
Yeah, right, mate. That's bloody good summary, JD. Previously, before I met you, I had to go seek the expert macro advice from Timothy Leonard Weir next door, but you have filled that void for me, so I might go ask Weary as well.
We've stopped hounding those boys a bit.
Yeah, they're probably glad too. Right, mates, good stuff, JD. I like getting
nice work, mate.
I like intimate time together. It's good for our
I love it, mate, and I love learning about things outside of the home ground. We travelled a bit today to North America, to Africa.
Hey, around the world ticket.
Bit in between.
Yes, right. Bloody speaking of around the world, Axis Mining Technology, the trusted drill advisor for survey instrumentation around the world. Bloody love it.
Who else we have, Matty?
Geez, we've got some other trusted people here. Shout out to CRE Insurance, who had a couple of pints with. What a pack of GCs that mob are. Tell you what, call out if anyone wants a bloody free audit of their insurance to see if there's any gaps, any bits of exposure you might have that you don't know about. Give the CRE team a call. They'll sort you out. Bloody all for free.
Free.
MMS as well. VRIFY, SMEC Power Technology, DSI Underground, Silverstone, Greenlands Equipment, K-Drill, and I'm sure you've seen a Spark Chart. today. Go look
Sure
at
you
it for
have.
yourself. Righto, JD. Hoodaroo, cobber.
Hooroo, mate. Good stuff.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation, or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation, and needs.